Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Tasty Bite, which can remain under pressure going forward because of global conditions. So let's understand in detail. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Tasty Bite Eatables, here's a small request. Kindly support me on Patreon. Once you do that, it will help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company. Established in 1995, they manufacture a number of ready-to-eat items, and their major market includes US, Europe and Australia, and they serve most of authentic Indian food which is packed and delivered to these places. The market cap of the company is around 3000 crores, and it is an illiquid stock, so one has to be careful while trading into it. In terms of numbers, so these are the Q1 numbers for FY23. The sales went up by only 6% and profit was up 7% year on year. So not a great improvement, even though FY21 was a pandemic year. Yet the things doesn't look that great because margins have shrunk sharply. It has low debt. Lower base helped the numbers to be in positive. Otherwise, they could have been a drop in profitability. ROE has dipped to around 5% and margins at 12% is not that great considering that it is in the food industry. In terms of performance, stock has been a drag for the last 1 year. In fact, for investors, it hasn't been that good of a stock. But over the last 10 years, it has done exceptionally well. So it has fallen over 35% in the last 1 year, and numbers have remained subdued. And so what has happened is that valuations have shrunk because the growth is not to be seen here. Earlier it was trading at 90, 100, 120 times earnings, and now the PE has shrunk altogether, and this is a very dangerous scenario for any stock that is trading at a very high PE multiple. So that's why the stock has not performed whatsoever over the last year or so. I think numbers may improve as things improve globally, but that will take at least 2 to 3 quarters, at least a couple of quarters for that to happen. So if you have a fairly longer term time horizon, 3 4 years, then yes, these are very attractive levels. Otherwise, one can definitely wait 1 or 2 quarters and see how numbers pan out, even if we have to buy a little bit higher. See, exports will remain under stress as I explained because of the situation in Europe and US, and will only perform once things normalize globally, and that will take time. We are seeing what is happening in UK, what is happening in US with the higher interest rates and higher inflation, etc. I think things will take some time, at least a quarter, 2 quarters, to get back on its feet. In terms of technicals, it has been weak technically, and strong long-term support lies around 11,000. Now it has dipped below 12,000. So these are very attractive levels because I think 11,000 should hold even if things become worse from here. I think 10,800, 11,000 should hold. So these are decent levels to start accumulating, and it will do well, or it will be in a bull run once it crosses 14,200. So there's a long way to go for that. So for long-term investors, these are good levels to buy because things in Europe and US should be better by middle of next year at the most. So at the most it will take at least 8 9 months, and then by that time I think stock may just recover from here by 20 to 30%. So it's better to accumulate here if you have 3 plus years time horizon. So in my opinion, you can buy at current levels and on slight dips and keep track of numbers. Can be a top performer once a global economy picks up, and may remain in a range because of the situation, geopolitical situation at the moment. And don't put more than 5% of your holding into such stocks which are less than 10,000 crore market cap. This is just a small cap at 3,000 crore market cap. So this is my video on Tasty Bite Eatables. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly subscribe to my Patreon network. Thanks a lot for watching.